because as people get poorer, their ability to buy luxuries falls, and so the prices for luxuries fall, but the prices of basic necessities rise as everyone has to plow whatever purchasing power they have left into survival. Well, hello there, my friends. Rafi here from the Endgame Investor. And yes, I will be participating in Silver Fest this weekend. I will be on panels with Ronan Manley. Is it even legal to say his last name anymore, according to the YouTube guidelines? I don't know. And Alistair McLeod, both men I highly respect, and I'm excited to be on panels with them. And I hope to see you at Silverfest this weekend. Don't forget to check out my Patreon, where you will get a weekly biblical commentary on monetary policy, economics, and government. And also consider signing up for a 2-week free trial of the Endgame Investor. As we get closer and closer to the endgame, I get more calm and rational and understanding. Today's Silver Report is brought to you by
Torgo's Executive Powder. Only Torgo's packs the power of 5 highly paid television executives into every can for maximum odor absorption.
Fortuna Silver Mines, symbol FSM, and these results speak for themselves for the third quarter. Just came out on November 9th. Production is up 1% in gold, up 7% in silver. All-in sustaining costs of gold, $1,159 to Lindera mine, $1,634 to Aramoka mine, both well below the spot price. All-in sustaining costs per silver ounce payable, $14.23 and $15.66 for the San Jose mine and Kalo mines, respectively. And despite a small loss of $4.1 million or 1 cent per share, they did some share buybacks of $2.9 million, returning capital to shareholders. If they can get through a quarter like this, they're going to do well when gold and silver reverse, which may have already happened. In today's Silver Report, we're going to go into why Europe is already experiencing hyperinflation, not just in the CPI numbers and the food inflation numbers, but structurally. That's the first thing we'll go over. Also, the Indian gold premium has accelerated and reached new highs despite gold climbing this week, which I believe is keeping gold out of the Comex as the drain continues despite the rise in gold prices. There has been zero interest in SLV as the fund continues to liquidate despite the big jump in the last 2 weeks. There's been zero interest in paper gold, which means the speculators, both in paper gold and silver, have not joined in to the chorus of this recent rally, which is a very good sign. The LBMA silver supply continues to fall down to new record lows of 843 million ounces, and Japan is confirmed to be selling US Treasuries, which is tightening the liquidity in the Treasury market, which is getting to dangerously low levels. And we are having bankers in the mainstream saying that another catastrophe along the lines of March 2020 could occur in the bond market, forcing the Fed to step in and pivot for one last time. And we all know what happens after that. And so let's get moving with this week's Silver Report, brought to you by Fortuna Silver Mines. First thing I wanted to go over is an article from November 3rd by Irina Slav. And the title is Europe May See Forced Deindustrialization as Result of Energy Crisis. Now, this is structurally what causes hyperinflation, the abandonment of the monetary medium, because why are countries abandoning industrialization? Because prices of basic necessities have gone too high, too fast, which means that the monetary medium is dying. And here, the globalist overtones are not subtle at all. The European Union, she says, has been quietly celebrating a consistent decline in gas and electricity consumption this year amid record-breaking prices, a cutoff of much of the Russian gas supply, and a liquidity crisis in the energy market. How is that anything to celebrate? I don't know, unless you are part of the World Economic Forum. Yet, she admits the cause for celebration is dubious. Businesses are not just curbing their energy use and continuing on a business-as-usual basis. They are shutting down factories, downsizing, or relocating. Europe may well be on the way to deindustrialization. And so this is structurally what causes the monetary medium to die its final death, or what we like to call hyperinflation. As prices for basic necessities go higher faster than other prices, it becomes less economical to produce stuff. And so the supply of stuff goes down further and demand goes up further, while demand to get rid of money substitutes rises itself, causing prices to spiral vertically, which is already happening in much of the food inflation statistics throughout the European Union, and of course in Central Europe in countries like Poland and Hungary and Czech Republic. It's starting there, it's going to spread, and once it goes global, the dollar itself will die, and we will have to return to gold and, of course, to silver. And yes, I believe physically in the initial stages, though I don't think that we will be trading physical silver coins for a very long period of time. It will be necessary for the rebuilding of the division of labor in the immediate aftermath of the collapse of the dollar, which is why holding physical silver is so important before it happens. And so slide 1 of the silver report for this week. This sets the backdrop for what is going on in the Comex metal supplies. First with gold, India gold premium jumps to a record high. We see here it's 17.334%. You can see here, if you squint a little bit, that there was a vertical line here. I think that's for November 8th or possibly November 9th. But anyway, it is a 17.334%. The Indians are not slacking on their demand for gold. It continues to race higher, and this is just barely a record high going back to what looks like 2015 here. I don't think there are numbers before this, but you see here in 2020 when the premium went down to around negative 4.8% or so, that is when metal started to flow into the Comex because the premiums in New York were at record highs, whereas now the situation is reversed, and the increase in the price of gold and silver since then has not brought the premium from India down, which is where most of the metal, I believe, is going. And so we see in the total gold Comex stockpile, there has been no bump higher, which is a very important development. Usually when the gold price reverses, you start to see flows back into the Comex. Historically, that is usually what happens. Not yet. It doesn't mean it's not going to happen, but so far so good. The drain of gold continues. Now, there has been a slight uptick in silver registered supplies this week, probably because of the jump in silver prices. Whether that sustains itself, we will have to see. We see here there have been small bumps along the ride down. Here's one, here's another, here's a third, but they have not been significant. There have also been slight increases in the silver supply in Comex during this drain. This might just be noise. We'll have to see going into the next few weeks. Now, the good news for the stackers is that the paper traders have not joined into the chorus yet. They are not interested in this run that's taken place in the last few days in silver. SLV continues to drain out. You can see here the red bars in November, 5 million ounces here, another what looks like 2 million, and yesterday 3.45 million ounces drained out of SLV, which means that there is negative interest in this fund and they are not grabbing onto it as the price of silver rises. The same in gold. There has been almost zero interest in paper gold throughout the November rally. You can see here in the yellow line around November 2nd or 3rd or whatever it was. The yellow line is the US gold price going up from about 1640. It was actually as low as 1620 here, up now to about 1720 or a little bit lower now. There's been almost no interest in stacking gold for paper funds. The drains continue, and hopefully they will continue long after. As for the LBMA, we can see that the gold supply is falling slightly, and the silver supply here, I think, is around 852, 847. I don't remember the exact number, but it is a new record low for the LBMA. The drain continues out of London, and I believe it is going to India, among other places. Now, this could be important. You see here, these are the outflows in Japan's foreign exchange reserves. Now, what does that mean? Foreign exchange reserves are mostly US Treasuries. This means that Japan is selling US Treasuries, and this paragraph is from an article out of Reuters a few days ago. It says by asset type, foreign bonds, most of which are widely believed to be US Treasuries, talking about Japan's foreign exchange reserves, bought during bouts of dollar buying intervention in the past, when the yen was strong, account for 4/5 of the reserves. So 4/5 of Japan's forex reserves are US Treasuries. Of the reserves, foreign bonds fell the most in September and suffered the second largest drop last month to 941 billion. Well, it says, the article says second largest drop. Well, what was the largest drop? It was the previous month. It was September of 2022. And so Japan's selling of US Treasury bonds has intensified and is going out at records now, going back to what looks like 2000 or so, maybe 1998 here. I don't know exactly, but it's an all-time record outflow of US Treasury bonds. Now, the final sentence here is the key. Officials would not elaborate, but market watchers interpret the drops as reflecting the sale of US Treasuries for yen buying interventions. Now, let's stop this for 1 second and think back. When has a central bank intervention ever succeeded for the long term? The answer, in fact, is never. They always put up fights at the end of a currency battle, but they always lose as the market is so much stronger than any individual central bank, because reality trumps fantasy all the time. Reality is stronger than all central banks combined, which is why all fiat is eventually going to fail, and that failure is knocking at the door right now. So the point is, if Japan is intervening in the currency markets in the strongest way that it has ever done so, it is a sign of desperation, and it is not long before they must capitulate, because something is going to snap in the currency markets. Could it be from Bitcoin and Bitcoin's collapse these days? You never know where it's going to come from, because everything is piled up and rehypothecated 50, 60, 70 times over. So the unwinding spreads from industry to industry. The only question is, where is it going to start? Not what is it going to affect. It's going to affect everything. We all want to see what the exact trigger is, but in the end, it's not going to matter. So the effects of this Japanese bond selling, we can already see in the markets. This graph on top is the Bank of America Move Index, which measures bond volatility. You can see the bond volatility got to its all-time record high here at the peak of the 2008 financial crisis, and there was a huge spike here during the March 2020 lockdowns of wisdom. And here, just a few weeks ago, we hit about 158, 160 looks like, and we're slightly down now to 124, but still we've been trending higher since 2021 when interest rates bottomed, and this is going to spike to all-time record highs, much higher than the 2008 financial crisis, because what we have now is so much worse. It just depends who's going to pull the rug and when. And here we have the title from a Zero Hedge article describing the last 10-year yield auction. And all you need is the title here, Yields Surge. This was November 9th. Yield surge after disastrous 10-year auction, biggest tail in over 6 years. So volatility is continuing in the treasury market. It's going to get worse to the point where something is going to snap, just like what snapped in the United Kingdom in the end of September. It's going to happen in treasuries. Exactly when, we don't know, but you can't time it. So when it does happen, you want your stacks ready, because once the treasury market breaks, the dollar breaks with it. And on the day after that happens, it might be difficult to go into a supermarket and acquire things with any amount of fiat. And the last thing I'll say here is that the CPI numbers for the US are coming out over the next few hours. Whatever they are doesn't matter. Watch food prices, food inflation. And why do I keep repeating this? Because let's take an extreme example. In a world where food prices rise 1,000%, but the price of rhodium-encrusted yachts falls by 50%, would you call that hyperinflation? If the ultra-luxury items are collapsing in price, but basic necessities are increasing by 10 times, of course it's hyperinflation. The total price level of all consumer goods doesn't matter. What matters is the prices of basic necessities, because as people get poorer, their ability to buy luxuries falls, and so the prices for luxuries fall, but the prices of basic necessities rise as everyone has to plow whatever purchasing power they have left into survival. So the question is, how far and how fast are food prices going to rise? This is Rafi, the Endgame Investor, with this week's Silver Report for Arcadia Economics. See you at Silverfest on Saturday, and hopefully I believe it will be the last Silverfest before the end game hits. And Silverfest 4 of 2023 will be a reunion of the Silverbacks that saved the division of labor on planet Earth. It sounds fantastical. It sounds insane. It is, and it is, but it's also very realistic. I'll see you guys next week.
When your toilet smells like feces from some disgusting species, make it take a powder with Torgos.
Well, thank you as always, Rafi, for the update. Sure has been a pleasure having you on the channel doing these Friday updates, which I know people really enjoy. And if you enjoy hearing from Rafi each week, then certainly you're going to want to come join us tomorrow at Silverfest 3. That's Saturday, November 12th, where we are going to be talking silver all day. And Rafi will be joining us for two of the panels. Why does silver keep leaving the Comex and LBMA vaults? He'll be there with Ronan Manley and also with Alistair McLeod for Is the Fed Going to Break the Markets? And Rafi will even be in one of the booths following his first panel where you can interact with him, talk with Rafi directly, ask some of the questions that you might have on your mind, or just say hello and get to know him. He's really good friend and a really good man, and it's been a pleasure getting to know him in addition to having him on the show. We have a full day of coverage planned, some silver miner presentations, an Ask the Experts segment, and a whole lot more. The link to sign up in the description field below. This is the third year that we've done this. People have had a lot of fun the last couple of years, and I expect that will be the same this year as well. So I hope you're having a great day out there and hope to see you tomorrow.